Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to yet another promising edition of the Forex Morning Mastery, your daily dose of financial insight and trading strategies. This week promises to be another exciting one as we have very interesting trading setups that we are going to be using to guide our trading decisions going forward. And another good news for our GBP USD fans is that we will be reintroducing this asset for this week. I shared a poll on my public platforms. At the end of the day, the GBP USD was the most preferred asset that we should look at for the week. So I have included the GBP USD to our watch list back again for this week. So for this week, we are going to be monitoring three financial assets, which includes the USOILSPOT, the GBP USD, and of course my favorite asset, which is the XAUUSD, popularly known as the gold spot. So we are going to be looking at all of these assets, and in fact I already shared a top-down analysis on both the XAUUSD and the GBP USD during the course of the weekend, and I do hope you guys watch this video as it will serve as a background knowledge ahead of this morning Forex mastery session. And if you in any way missed out on that video, you can easily find the link referring you to that video right in the comment section, in the description box of this current video you are watching. So I'm so excited to welcome you once again to yet another promising edition. My own name is Sheriff Daramola, and for the next 40 minutes thereabout, I'm going to be your host as we will be reviewing the current market structure from both technical and fundamental perspective, using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. So I encourage you all to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And for those of you who are joining me for the first time, you're highly welcome on board. I'm very excited to have you around with us this morning. And I know the first thing you will be asking is, what is the Forex Morning Mastery all about? What is it that we are doing here, and how did it come to existence? Well, like I said earlier, I usually share a couple of videos during the course of the weekend which details what my expectations are ahead of the new week. Now, the Forex Morning Mastery was born out of the necessity to do live follow-ups on this asset on a daily basis. So here comes the Forex Morning Mastery, and we usually gather here every day as technical traders to monitor, review, and also manage our positions ahead of both the London and New York session every day. Usually and officially, the session kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here to do our business as usual. So I recommend that you stay tuned in so you don't miss out on any of the insights that we will be deliberating on today. And another thing you should also take into consideration is the fact that my aim here is to equip you with a better understanding of the financial market from a price action based technical analysis, and using this to strategically position ourselves for the next move. So I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be talking on today. And I encourage you to actively engage in the comment section as well. So once again, I welcome you all on board. So as usual, the first thing we are going to be doing this morning is to keep tabs with the fundamental factors that are likely going to be affecting the market sentiment today. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors usually have a way of manifesting on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and of course timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, on the economic calendar, based on the asset we are looking at for this week, we will be focusing on economic features from both the United States and the United Kingdom economic docket. Now, for today, Monday, February 26th, we do not have any high impactful event to look out for. So what I did here was to include some mid-tier economic features to actually have a broader view into what market participant will be looking forward to today as a guide in making a well-informed trading decisions. Now, when I did that, I was able to come up with this list you're seeing on your screen right now on the Monday, February 26th. So we are going to be focusing on the two major ones that are coming up today. The first one here is coming in from the United Kingdom economic docket, and this is a speech, of course, and it is coming up in about 3 hours from now. And Will Peel is the chief economist and executive director for monetary analysis and research of the Bank of England. He is also a member of the Monetary Policy Committee, which makes whatever he says today carries a lot of weight, as market participants will want to hear his own perspective into the current monetary policy outlook of the Bank of England. Now, remember, we talked about the Bank of England at this point, since we've not been treating the JPY/USD for a while. So let me just quickly give you a quick background of what is happening in that economy. As it is right now, the Bank of England is considered, the United Kingdom economy is considered to be technically in recession after two consecutive contraction as regards to their GDP, the Q4 and the Q3. Now, on Thursday, we had some very positive data from that economy. The PMI came in quite okay for the manufacturing sector, which further gave an insight into some improved activity in that sector, which of course you know how the manufacturing sector is considered to be a sensitive sector to any economy. So we had some positive news on that one, and then though the consumer confidence report survey did not come in very well, but we're still looking forward to see what the other event for this week is going to bring, and looking forward to this speech that is going to be having today. Everyone will want to have an idea into what the Bank of England's decisions may likely be as regards to interest rate, because in the meantime, majority are still thinking that the Bank of England will keep its interest rate unchanged for a while it keeps monitoring the inflationary status of that economy. So everyone will definitely be looking forward to what Peel is going to be saying today. So it's important that we mark that timing, as we may likely see some traction in the market during the time of the speech. Then looking on, we have to the United States economic docket. That is about 6-7 hours from now. We will be looking forward to the new home sales change data for the month of January, and this is usually released by the US Census Bureau, and it is an important measure of housing market conditions. And of course, we know house buyers spend money on furnishing and financing their homes, so as a result of this, there is always a demand for goods, services, and employees are also stimulated. So generally a high reading is considered as positive for that sector, which in turn would reflect on the chart as a bullish traction in favor of the US dollar, while a low reading is considered to be bearish. Now, if we look at the previous data for the month of December, it came in at 8% expansion. So we look forward to see what the actual data will be like today. Will it be above this? Will it be beyond it? Will it be just as the previous data, or will it be below it, to give us an insight into how well that sector is doing. So the timing here is about 6 to 7 hours from now, so we do want to be marking this out on our calendar so that we can be on standby to capitalize on any potential move that will happen around that time. Now, as technical traders, we understand that this, the anticipation of this event has a way of influencing the market sentiment, which of course would reflect on the chart as price action. So our duty this morning is to sniff through the current market structure to see how if we can identify any structure or patterns that we can use to strategically position ourselves for the next move. So I see your comment here, Elwine Franzman. Good morning to you. I guess this is your first time with us. This is my first time seeing your comment. Glad to have you around with us this morning. So with that being said here, let's dive right into the business. So as usual, the first asset we are going to be taking on this morning is going to be the US Oil Spot. And on the US Oil Spot, we had quite an interesting situation last week where we had the privilege of buying, and later on during the course of the week, it was more of selling this asset as price continued to spiral all the way to the downside, giving us some significant amount of profit on that particular move. And for those of us who capitalized on this opportunity, well done and kudos to you for being on standby to capitalize on this move. Now, going into the new week, what is going to be our plans? How are we going to continue selling this asset, or are there chances that buyers could come in today to incite another wave of bullish momentum? Well, since I did not do a top-down analysis, I did not do any video on the US Oil Spot during the weekend, I will be sharing with you my idea from a top-down perspective, starting from the higher time frame, where we will be trying to understand how market participants have been behaving in the last, let's say, the last couple of months or so. But before we go into the charts, looking at things from a technical standpoint, it is very, very important for us to also keep tabs with the fundamentals and the behind the scenes that has been influencing the character of price action in the last couple of weeks. Now, the drop in the US oil in the last 6, 7, 8 days now is can be attributed to uncertainties as regards to demand, which may have been influenced by the current global risk factor. Now, this uncertainty could lead central banks to take cautious approach as regards to the interest rate. And of course, we've had over the week, majority of the central banks are at this point in time taking precautionary measures as regards to making any decision on interest rate. We saw the Fed Reserve talking about looking at trying to study the inflation for a couple of months more to make it before making any decision as regards interest rate decisions. We also saw the ECB also followed suit. We had of the Bank of England too as well, trying to take precautionary measure as well, and while keeping the trend of higher interest rate. While keeping the trend of interest rate higher for an extended period of time, is going to be slowing down economic activities, leading to less use of oil and resulting into lower demand. Now, we all know technically that when there is a low demand, what happens? The price of oil will drop, because when there is low demand, supply will increase, and this results into surplus of this commodity in the market, making it cheap. Now, the recent FOMC minutes also from the United States, we talked about this last week, also showed concerns about cutting interest rates, indicating a preference for keeping borrowing costs high to control inflation. Now, this also will contribute to decrease in oil prices as it will reduce demand, and of course supply will rise. Now, in addition to comments from Federal Reserve officials indicating interest rate will likely stay high, they have suggested that they will keep this interest rate cut open and wait to see if the inflationary figure for the month of January, which came at phenomenal high, is just a blip, or probably there is an issue in the economy that needs to be resolved that may likely lead to further rate hike. So and in addition to all of these, we cannot ignore the geopolitical tensions in the Middle East too as well, which of course for me, I think this tension in the Middle East is the one that is stabilizing oil prices at this point. If not for the geopolitical tension in the Middle East, oil prices would have dropped significantly to the downside. So we are going to be taking all of these factors into consideration while we look at things from the technical standpoint, keeping our options for buys and sells opportunity open as much as possible. Now, let's scale up into the daily time frame, where we want to be having an holistic perspective into what is really going on in this market at this point in time. Now, our first point of contact this morning is going to be on the daily time frame, where we shall be seeing what has been going on in this market in the last 6 to 7 months. Now, looking at the structure here, the first thing I was able to observe is the $78.50 level, which actually was our previous key level for the last couple of weeks now. I think last week and 2 weeks ago, we were using the $78.50 level as our key area to guide trading activities, where it was also serving as a neckline of a potential reversal pattern. Now, besides this level here are a couple of trend lines you will see. Remember, I did emphasize in my previous sessions how since the month of September, price action has been dropping significantly to the downside, and something interesting happened during the month of December, where we saw that despite the strong bearish momentum in this market, we begin to notice some buy traction resume, negating all attempt by the sellers to break through and continue to the downside. And this is evident, as you will see here. Buy pressure resume, and look at what was happened since the month of December. Price continued to find higher lows, resulting in the idea that buyers are trying to build a momentum behind the scenes, hereby giving us a reversal pattern to work with. And if you remember vividly, we said here that the $78.50 level will be serving as the neckline of that reversal pattern, where we were actually anticipating the breakout of that structure to welcome buying opportunities. But as you will see here, since the month of November of last year, you will see how that area had continued to be a barrier for buyers. As you will see, every attempt by the buyers to break through the structure has always been met with strong resistance from the sellers, making that area a strong selling niche for market participants. Now, coupled with this key level is this ascending trend line, which is going to be playing a major role in guiding our trading decisions for this week. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying. And we are not going to be considering selling unless this ascending trend line is broken and breached to the downside. Now, to make things easy for us to position ourselves strategically for the next move, we have our key level for this week, which is sitting around the $76.50 level, which interestingly shares a beautiful confluence with our ascending trend line. Now, you know how we use our key levels in this community. If price remains below the key level, we will be looking out for selling opportunities, and if price goes to find buy pressure above the key level, we'll look out for buying opportunities. And as you will see here, let me zoom in, you will see despite the strong bearish momentum from last week's trading session, we saw how as soon as price got into that confluence between the key level at the $76.50 area and the ascending trend line, we saw some little bit of buy pressure resume around that area. In fact, price action closed at exactly that point, making it a crucial juncture in this market to make any decisions going forward. Now, whatever happens around this area this week or the early hours of this week will determine if we are going to continue selling the US OILSPOT or get ready for buying opportunities. Now, you would agree with me that we are at a crucial juncture. So what we are going to be doing now is to scale down into the 1 hour time frame, where we want to see how market participants have been reacting to both this key level at the $76.50 area and of course the ascending trend line we identified here. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. Now, looking at the structure here, this is the ascending trend line here on the 1 hour time frame, very visible right here. So let me highlight it so you can see what I'm talking about. So this is the ascending trend line right here, and one thing you will notice here is that the ascending trend line has been broken to the downside, hereby inciting the idea of selling opportunities. Of course, we are not going to be buying when price action is trading above our ascending trend line. Now, if we zoom into the current structure to see how the market has reacted to the structure, you will see that we have a beautiful range where price action since the week began has been confined within our key level at the $76.50 area and the $75.875 level, to emphasize the uncertainty that is going on in the market at this point. And whenever we identify a flat range like this on our market structure, all we want to be doing is exercise patience and wait for price action to either break out of the resistant line of that range to give us an opportunity to buy, which of course will be an attempt to climb back above the ascending trend line, or break down the support line of that range to incite selling opportunity. Now, looking at the structure here in the last 1, 2, 3, 4, 5, 6, 7, 8, last 8 hours, you will see that buy pressure has been persistent around this area, as every attempt by the sellers to break through has been met with strong resistance from this buyers. Now, as it is right now, for us to sell this asset, we would like to see some selling pressure happen below the structure for us to join a bearish move. And if we consider the nature or the character of price action in the last 1 week, which of course has been majorly bearish, I'm of the opinion that this whole situation we have here could turn out to be a trend continuation pattern, maybe in the form of a bearish rectangle, where the breakdown of the $75.875 area will be all we need to join a bearish move to the downside. So if you have been profitable on this asset, let's say for the last 1 week, remember we have been selling this asset prior to the beginning of this week, you can afford to place a sell stop order below the structure and give enough breathing space by allowing your stop loss to be somewhere above this area. That's about 35 to 45 pip stop loss, and let's see how price will play around here. But if you are new with us and this is your first position on the USOILSPOT with us, I would encourage you to exercise patience and wait for confirmation, which of course would reflect on the chart as a potential retest of structure after the level is broken to incite a downtrend move. So this is how we are going to be managing our sell position on this particular asset today. And the only condition that will make us buy this asset is for price to break out of our key level, and then we look out for buying opportunity, after which we join the uptrend move. And if there are new levels to add more positions, I will definitely let you know on both my Trading View and Telegram platform. So this is my simple view on this particular asset this morning, as our center of focus for today will basically be between the $76.50 area and the $75.87 level, where depending on the direction of the breakout will give us an idea of where price is likely going to be heading to, at least for the first half of this week. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart. All right. So I can see a handful of comment right here. I'm loving the positive energy this morning. I can see you, Rory Sang Sekilo. How are you doing? Good morning. Sam, thank you for the compliment. I really appreciate and glad to have you around with us this morning. Princess Abulokwe, good morning to you. Glad to have you around and thank you very much for the compliment. And I also see CIS here too as well. Good morning to you too, CIS. I hope we all had a wonderful weekend out there too. So, in the absence of no questions, I want to assume that we are all on the same page, and as a result of this, we shall be moving on to the next asset on our watch list. So, the next asset on our watch list for today is the GBP USD. And like I did said earlier, the last time we traded the GBP USD was about 6 to 7 weeks ago. And we opted out of the GBP USD for the USDJPY after I did identify a very interesting trading setup at the beginning of the year, which of course gave us over 800 pips on the USDJPY. And in the last couple of weeks, I've been seeing comments in the comment section as regards to revisiting the GBP USD, though I was very reluctant as regards to this. However, in the last couple of weeks, I begin to notice this choppy market conditions on the USDJPY, which of course has made us not to really gain some significant traction. As every point in time we have a position, price quickly comes back to our entry point. And we all know why this is happening. Of course, we know why the uncertainty in the USDJPY market is, and this is due to various factors, of course, and I will be mentioning a couple of them. Remember, we talked about the Bank of Japan's Governor Hawkish remark about 3 weeks ago, where he emphasized that the interest rates, the inflationary target for the Bank of Japan's Bank of Japan is gradually coming to fruition, and as a result, they will likely be pivoting from their current ultra loose monetary policy. Now, that was the beginning of this whole saga. Now, the following week, we had a speech by the Deputy Governor where he said, though they will be pivoting from this ultra loose monetary policy, but it will be on a cautionary note. That means they wouldn't be aggressive as regards to increasing interest rates. And this wasn't a very good signal for market participants as they dumped the yen following this remark and started buying the US dollar, hereby making the US dollar gain some traction. Now, a couple of weeks ago, we saw the GDP from the Bank of Japan's economy, which came in below expectation, revealing a contraction in that economy for the second time in the last 2 quarters, which technically puts the Bank of Japan, the Japanese economy in recession. Now, this is not a very good signal for following these hawkish remarks by the Bank of Japan governor, hereby putting some uncertainty into the market, as majority are not sure if the ultra loose monetary policy will be dropped for higher interest rates. Now, last week we had comments from the Bank of one of the policymakers from the Bank of Japan, where he did emphasize that the Bank of Japan is ready to intervene in the market if the value of the Japanese yen continues to drop. Now, this has resulted in fear in that market, leading to choppy market conditions where we saw retracement moves, consolidation phases, and the likes. And because of this uncertainty, things were not looking very encouraging to strategically position ourselves for. So I had to put out a poll during the course of the weekend. Can we do the USDJPY or the GBP USD? And the result came in favor of the GBP USD. So as a result of this, we had to include the GBP USD into our watch list for this week. I hope I was fair enough in this. Now, for those of you who have been with me on both my TradingView and Telegram platform, You must have gotten an update as regards to the GBP USD, as I did do a top-down analysis on this asset during the course of the weekend. And if in any way you missed out on that video, please, you can find the link right in the description box of this current video you are watching. Check it out after the live session so you can have an understanding and background knowledge of how we got to this point. You will be seeing on the 1 hour time frame, so I wouldn't be going into the higher time frame on the GBP USD. So right here on the 1 hour time frame, we have an interesting trading setup going on in the market right now. And for those of you who saw my commentary this morning on the GBP USD, I did emphasize that the US dollar continues to show strength against the pound sterling, driven by hawkish comment by the Federal Reserve officials during the course of the last 2 weeks, and this has caused the GBP USD to start the week on a negative note. And in addition to that, we also saw the consumer confidence data that came in from the United Kingdom last week Friday, which of course wasn't good at all, as it was below expectations, giving us signs that consumers are not spending money in the economy. That means they are keeping their funds, which is not a very good signal for any economy at all. And this may also be one of the reasons why we saw some downward pressure as at the beginning of this week. Now, with global risk sentiment improving, the Bank of England is likely to maintain cautious approach as regards to its interest rate decision, just like the way the United States is doing. Now, on the other side of the pond, that is from the United States, which of course is what we are gauging the pound sterling against, there is a proposal for a delay in interest rate cuts for now, as officials want to assess the January's high inflation report to know if this is just a one-off event or is going to continue. So they are looking forward to see what the inflationary status is going to be like for March and April before making any informed decisions as regards to either cutting interest rate, maintaining it, or increasing it in their May or June policy meeting. Now, as a result of keeping interest rate higher for an extended period of time, this may likely favor the US dollar, as the US dollar has a higher differential yield compared to the in interest rate compared to the pound sterling at this point. So to guide our trading decisions for today and for this week, we have a beautiful trading setup on the 1 hour time frame, which we will be using to guide our decisions. Now, the first and first here is the fact that price action is currently trading above our key level at the 1.265. For those of you who watch my video on the GBP USD, you will be familiar with the structure, and you will see how this level had played a major role in determining the direction of price action in the last 6 to 7 months or so. So if you are not watching my video on the GBP USD, please go ahead and watch that video after this session to have a better understanding of why this level is important. Now, coupled with the fact that price action is trading above the key level, you will see that we also identify an ascending trend line on the 4 hours time frame, which of course has captured the series of higher lows in the last couple of weeks to emphasize the strength of the buyers during the second half of the month of February, and of course also emphasize the bullish momentum in this market. Now, as it is right now, we wanted to see how market participants will be react. Right here, that price action since the new week began has been confined within the 1.26830 level and the 1.26565 level to emphasize the prevailing uncertainty in the market since the new week began. And usually when we have this kind of uncertainty identified, we want to exercise patience and wait for a trading signal in the form of either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, let us talk about the potentials of the sellers first of all, considering how the chances for the US dollar to rise is more visible than the pound sterling to rise at those points in time. Now, what are the conditions we are going to see on this chart that will make us consider selling this particular asset? Well, first of all, we would like to see price action break down the support line, and I'm not going to be supporting the idea that we have a sell stop order right away to jump into that sell position, as I will feel comfortable waiting for confirmations to happen before jumping into that move. And the question is, why is this so? Well, the first thing first is price is still trading above our key level, and you know how we treat our key levels in this community. When price action is trading above our key level, we obviously want to be looking out for patterns and structures that support the idea of buying that asset, and we are not going to be selling unless this key level is broken to the downside. Now, look at how that key level here also shares a beautiful confluence with that ascending trend line we marked out earlier. Now, with this ascending trend line right here sharing a confluence with that key level, it makes quite a lot of sense to look out for buying opportunities. Now, the only condition that will make us sell is for price to break down both of the structures, and then we can now start thinking of selling and looking out for probably a retest of structure or any form of pattern that supports the idea of selling before we jump in to any bearish move at this point. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. However, if the momentum continues in such a way that it breaks out of the resistant line of that range at the 1.26830 area, we definitely want to be placing a buy stop order, since all the parameters on this 1 hour time frame support a bullish idea. Price remains above the key level, price also is floating above the ascending trend line, all of which supports the idea of buying. So I'm going to be placing a buy stop order above the 1.26830 area, and please remember that due to volatility we want to have a wider room for stop loss, so we could be having between 20 to 30 pips stop loss on this particular one. And if price goes ahead to break out of the 1.269, which we did identify in my weekend video on the JPY/USD, we will be adding more buy positions to our existing trade. So it's such a simple trading setup we have here on the GBP/USD. Let's see how the market is going to react to the structure today. Is price going to break down the support line for selling opportunities, or are we going to be seeing a breakout of the resistance line for buying opportunities? So let's be on standby to capitalize on whatever opportunity the market presents to us. So this is my simple view here. If you have any questions whatsoever as regards to this trading setup, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions, and you can use that time as well to mark out these levels on your chart, as you will definitely be needing them as a reference point to guide your independent trading decisions for today. So I see a comment here from Elwin Franzman. I hope I pronounced that name correctly. Please pardon me if I didn't. And your question here says that I would like to know, when you say place limit order above or below this level X, how many pips above or below, please? 1 pip, 10 pips or more? Very interesting question. It shows that you're new with us here, and let me quickly clear this once and for all. Now, in as much as I am not trying to become a signal service provider here on the Forex Money Mastery, but instead try to make us understand what the market structure is saying and how we want to position ourselves for the next move. I also want you to understand that my viewers encompass various types of traders. We have scalpers amongst us, we have positional traders amongst us, we have swing traders, and of course we have day traders. Now, what we do here on the Forex Money Mastery is to try to understand what the psychology of the market participant are saying and what are the areas where we want to look out for opportunities to either buy or sell. Now, once we identify the structures, I do emphasize this during the course of the session, and depending on the type of trader you are, you can choose to decide how you want to position yourself for the next move based on that particular structure. Now, to be pragmatic about this, to give a simple explanation on what I'm trying to say here. Now, let me say, for instance, I said we are looking out for buying opportunities above the 1.26830 area. Now, being a day trader, for instance, if you look at the higher time frame, you'll see that we have some levels higher there where you can use as your TP target depending on where you're coming from. Now, if you are, let's say, a day trader, for instance, buying above the structure, a day trader or a scalper, let me use a scalper for instance. A scalper will be looking at, let's say, 20-30 pips as TP target, right? Now, if we are looking at 30 pips TP target from here, so you will be looking at somewhere around the 1.27, 150 as your TP target. Maybe you have a risk reward ratio of 1 to 2, so you have your stop loss maybe about 15, 10 pips depending on what kind of trader you are. So if I say we should buy above the 1.26830 area, so anywhere above that area seems reasonable for us to buy, as we are within the buyer's territory at that particular point in time. So it could be 1 pips, 2 pips, 3 pips, depending on your own approach to trading. You can place your position around that area. So what I'm simply doing here is to identify territory where it looks reasonable for us to either buy or sell. Okay, so this is basically what we are doing here. So I'm not trying to be a signal service provider on this platform. All right, and if we are working one-on-one, well, you can have the privilege of having a precise form of entry due to my understanding of you when we work together. So I hope I make myself very clear there, Elwin Franzman. And if you still have further questions or you need some further clarifications, feel free to let me know in the comment section. All right, so in the absence of no further questions, I want to assume we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. And please, we have about 13 people on board and we have 9 likes. Please, I would like you to click on that like button. Click on it, please. Give us a thumbs up. This is the only way you can actually support this channel and community to grow, and thank you very much as you do so. And for those of you who have liked this video so far, I really do appreciate your likes, and more powers to you, and thank you very much as you do so. All right, so Elwin says it's quite clear. I'm very glad you found it clear enough. All right, so let's move on to the next asset on our watch list. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And since the new week began, gold price started the week on a bearish note, but has since been caught within a range, especially throughout the Asian session amidst the ongoing geopolitical tensions in the Middle East, which has maybe resulted in some recent dip in the US dollar. And On this asset, if we look at the structure, let me quickly state here that we will only be talking about analyzing the 1 hour time frame. I already did a top-down analysis on the XAUUSD during the weekend, and I encourage you to watch my weekend video if you have not watched it to have a better understanding into what we will be talking about here on the 1 hour time frame. So right here on the 1 hour time frame, obviously price action is trading above our key level, which we identified in that video, around the $2,025 area, which of course had played a major role in determining the direction of price action in the last how many months? I think since October or November, this level had played a major role in guiding trading decisions for market participants. Now, coupled with the key level, we will see that price action is trading above the ascending trend line. Remember, our 4 hours time frame captured the character of market participants since the beginning of the month of February, and what we saw was that during the first half of the month of February, price was finding series of lower highs, giving us this descending trend line you're seeing right here. And we saw what happened immediately we got to the half month. We saw price action begin an uptrend momentum once again, and this started around the 1,985 level, which happens to be our key level for last week. And of course, we were lucky enough to capitalize on this bullish opportunity as we rode it all the way into the $2,040 area. Now, going into the new week, this ascending trend line here is going to be playing a major role in guiding our trading decisions. And of course, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we have no business selling this asset. Now, zooming into the current structure to look at how market participants had reacted to the structure since the new week began. Of course, it is clear that the price action has remained confined within the range of the $2,035 level and the $2,030 area to emphasize the prevailing uncertainty going on in the market at that particular point in time. Now, with this range identified, you know how we use our ranges in this community. We would have to exercise patience, waiting for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And of course, I did give an update this morning as regards to what we are going to be doing, as I marked out both the 2035, the resistance line, and the 2030, the support line, for opportunities to trade. And as it is right now, the 2035 level appeared to have been broken this morning, triggering our first buy position for the week. Though at the moment that position is running in a loss right now of about 10 pips, which is still within the buyer's territory at this point in time. And considering the fact that price still remains above the ascending trend line, it makes quite a lot of sense to hope that this momentum will continue to the upside. And please ensure you have a wide range of stop loss right below the support line of that range, below 2030, giving us about 50, 55, 60 pips thereabouts, depending on where your entry point is. So let's see how far this momentum will go as price action has broken out and triggered our buy stop order at the 2035. Now, for those of us who are yet to get a position triggered, you can have a buy stop order above that structure, and of course above the 2040 to see how far that momentum will go. Now, another thing I would like to emphasize here is that that could support the bullish potential in this market is the risk of increased military action in the Middle East. We kept on seeing airstrikes, and in fact, while I was watching the news this morning, I heard Netanyahu, the Prime Minister of Israel, saying that he's still going to further bombard Gaza going forward. So this whole escalation is continuing, and on the other side, the Houthis too in the Red Sea are also attacking vessels too as well. And usually when this kind of geopolitical tension exists, it usually favors safe haven assets such as the gold. Additionally, uncertainties about the Federal Reserve interest rate decision could push gold prices up ahead of the US economic data coming up later this week. We are looking at the GDP coming in on Wednesday, and of course the consumer consumption personal expenditure coming up later in the week as well, before a clear direction could happen. So based on all of these factors, we will continue to hold on to that bullish bias unless the structure states otherwise. Now, if this structure is going to reverse on us and incite some bearish momentum, well, the only condition that will make us sell this asset is for the ascending trend line to be broken to the downside. And in fact, I would like to do some little adjustment here to capture some of the pivot lows here to emphasize. Okay, so I would have adjusted this, and if we look at this closely, you will see how the support line of that range had a $2,030 area, shares a beautiful confluence with that ascending trend line. Now, if I am going to be selling here today, I would like to see price action breakdown, retest the 2030, then I want to join a bearish move, and if price goes ahead to break down my $2,025 level, I will be adding more sell positions to my existing trade. But till then, we maintain a bullish bias here. Price has triggered our buy stop order. Let's see how it's going to go. And for those of us who are yet to get triggered, you can place a buy stop order above the 2035 and of course the 2040 to maximize the potential of this bullish move when it happens. But if otherwise the breakdown of the $230 happens, then we have no other choice than to get ready to sell. So this is my simple view on the XAUUSD for today, and of course we shall continue to monitor this asset during our XAUUSD live window, which is coming up much more later in the day. I already dropped the link to the XAUUSD live window in the comment section. It is pinned at the top of the comment section. You can click on that link, click on the notify me button so you can get notified as soon as we come on live. Now, for those of us who are joining for the first time who do not know what the XAUUSD live window is all about, well, this platform was born out of popular demand from members of this community, where we come to monitor real-time price action during the New York session on a daily basis. So it usually kickstarts about 5 to 10 minutes into the New York session, and it lasts about 5 to 7 hours depending on the volume of trading activity for that particular day. So I look forward to seeing you all in the comment section of the XAUUSD live window today. So on this note, I would like to say here that if you have any questions as regards to the XAUUSD, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off to see if there are any questions before we start rounding off on Monday's edition of the Forex Morning Mastery. And if you are yet to click on that like button, please do. This is the cheapest way you can actually support this channel to grow, and thank you very much as you do so. And for those of us who had clicked on the like button, I really do appreciate you guys, and thanks for the support so far. So let's see if there are any questions before we start rounding off on today's session. So in the absence of no questions, I want to assume that we are all on the same page, and it's on this note we have come to the end of today's Forex Morning Mastery session, as it has been a wonderful moment with you guys. I really enjoyed every single moment with you guys, and in fact I love the energy this morning. I really appreciate it, and I look forward to seeing more of this sort of. Today we were able to attend to we were able to attend to the 3 financial assets on our watch list for this week, which includes the USOILSPOT and the newly introduced GBP USD, and finally my favorite one, the XAUUSD, popularly known as the gold spot. And in fact, we were able to identify simple trading setup using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today, and of course position ourselves to capitalize on any potential move that will be happening at least for the first half of this week. And I hope we all have highlighted and marked out the structures on our chart. If you have done so, well done to you. So all we just need to do right now is exercise patience and wait for the structures to mature and allow this trade to move. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. Now, with this understanding, it is pertinent that we have a well-defined risk management strategy in place to mitigate against any risk on our portfolio. And for those of you joining us for the first time, I do hope we all had a wonderful and insightful moment. I hope you gained one or two things from the session. If you did, you want to be part of the subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow. 9:05 a.m. UTC, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and at the same time prepare ourselves for tomorrow's London and New York session. So I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.